Hello everyone, this is Teddy Keckstead from Forex Trading Unlocked, and we are here on October the 1st, 2020, the beginning of the fourth quarter, with a Forex market analysis for you. And before we get into the meat and potatoes, we want to just have our disclaimer up here to remind you that this webinar is for illustrative and educational purposes only. So we will be covering all the major foreign currency crosses against the dollar and see how things are shaping up and looking to follow through into the end of the week. So with that, we're going to just give you one quick plug for the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. Through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets in any markets. And now let's go to the live action scene here. We have the forex-trading-unlock.com website pulled up, and at the top of our nav bar there's the Forex Trading Unlock workstation tab, which we already put. And we are going to skip past the numbers for the day, the calendar, and we're going to look at how the dollar index was yesterday. Now, it was slightly lower yesterday. However, it did put up a fight, and it really didn't. It's more of just a corrective move, I think, of what's going on in the dollar. So let's take a look and see how things are shaping up today. So most of the session for today is through. European markets obviously closed hours ago. In Asian markets, we have the euro trading right now. It's $1.1740. So what are we looking at here? Well, so far we have been trending lower now for a little while. Now, we had a head and shoulders formation that was completed last week, or a couple weeks ago. So if you can see this now, it's a little bigger here. Here's our head up here, and here's our two shoulders. Here's our neckline, which was violated. Now we're trending below that. So now let's see what we're looking at. So we have a short-term downtrend. The market's been trading lower since September. We're in a temporarily have a corrective move higher. Now the question is this the beginning of a basing, and are we going to still bring back those dollar bears and those euro bulls? Well, there's some funky stuff going on in the interest rate environment between the euro bobble and the euro shots, and then our US 30-year and 10-year and 2-year notes. And with those acting the way that they are acting, it's really difficult for the currencies to get some radical moves against the dollar, meaning that the interest rate variable, which is a component of currency pricing, is kind of holding back the euro. And then we have some other things that are going on as well, with somewhat neutral to lower oil prices and a couple other commodities that are now falling backwards. So what we're going to look at here, it's really important, is to notice this. When we made this high for the head, we had established a lower move low. Then we established a lower move high, and we continued to establish lower move low, lower move high, lower move low, and right now we still are currently have not made a higher move high, so that we are establishing either a lower move high or we're going to break out to the upside. So I would say that only if we can get above this neckline, which will kind of be support for a continuation or sideways to slightly bullish outlook. But right now, I don't think that that's going to happen. So let's see, what are we looking at for as far as retracement levels here? So if we just take a standard fib level off of this move from the beginning of the summer up to here. Okay, let me move this over here. Okay, now I can see it. Okay, so as you can see, as far as downside targets on a fib basis, here's our 50% level. Came very close to that already, that we almost touched, and now we're trading above that. so that's kind of a key area. So now we know that this low that was set last week around $1.1614, this is going to be our big downside sell-off level. If you are a bull, I would be very leery trying to hold on to a long below this level. First of all, if we fail from here, that confirms lower move lows after a lower move high, which is just basic confirmation of a bearish trend and continuation of the trend. So use cautious. If you're an aggressive bull, I would be very leery, like I said, of being long below 116.14. So the 115.92 area, also this would be our 50% threshold from this big move that goes back from here. It's from the middle of July, or excuse me, end of June before July. So that was our last basing period. So on a short-term basis on the Fibonacci level, we've come to basically bounced just shy of a really good area. But I don't believe that right now, since the trend is your friend and lower move lows and lower move highs are indicative of continuation of that said type of pattern until something else acts upon it. So we don't have any real reason to deal with that right now as far as what would be bullish to euro, because we have a lot of trade deals and there's recessionary talks there. Obviously, they had some very good economic numbers that have surprised lately over the past few days. So that's the biggest component in the dollar index that's helping to hold it back. But right now, the dollar index in itself is kind of in a corrective mode. It's been rallying for the past month and a half. It's no reason not to have a little digestion. Now, here's where I say, like, I think the euro and the other currencies are just in a corrective move and getting ready to run out of gas. So the British pound here has been making consecutive lower move lows and lower move highs as well. So this low, also, this bottom the same time around a week and a half ago, and I think this also is another market where you have to key off of these lows. If you are an aggressive bull trying to buy into this, if you think it's just a corrective move that has now ended and we're going to have a bullish rally against the dollar and the pound, well, then you're in a good area, I guess. But if you are still long below $1.2672, you're not just taking heat, you're also getting screwed by not following the trend. So I'd be very careful if you're already aggressive. If you're just getting into the long trade, I would be using caution. And if you got in lower, especially closer to this $1.26 area, either take some profits off the table or definitely keep your stops tight, because I would be very leery of because you could have a very quick sell-off. The pound, when it breaks or rallies and has an excessive move like it did over here, you can see the kind of volatility. Like tomorrow is a Friday going into a weekend where we have a whole bunch of things going on geopolitically all across the globe, and I think that as a whole, that's most likely going to weigh on the British pound. I don't see it gaining a lot of strength unless you get a real big uptick in oil, which I don't see happening. Now, of course, on the longer term, if you look at this, perhaps, if we go all the way back to here, we're just coming into this little spot here where we have support possibly coming in for this to bounce. And then we also had this symmetrical kind of slide here from the middle of June into the end of June. And then we had this big rally. Not quite as significant as this slide was here, but very possible. You know, if this is the bouncing point, this could be the aggressive area for a nice long. I just don't see it getting back up towards this $1.34 or $1.36 area or anything like that anytime soon. There's just too much between trade deals and other things, not to mention you have the Northern Ireland conflict problem brewing now, and there's a whole can of worms in the UK that just just are asking for instability. So, but right now, you got an aggressive buy going on here. It's lower on the day, kind of quiet right now. Let's figure this one out too as far as a move. So if we just take this last wave higher on a fib basis, all right, let's move this over a little bit so we can get that just right. So where do we get to? See, now this is another thing too, is on a fib basis, you are kind of looking at where we might want to have a bounce. So there's an argument for the bears, because here's your 0.618 level, which that we pierced, and now we've stayed above it. So that's definitely a key support. This is another reason why, since we have this level as 0.618, if you fail at 126.72 here and you're long, I could say is like you don't know your trend theory, because that's definitely a bad area to be long against. Now, if you're looking to be an aggressive bull, wait for a slide below there. But I don't know if buying dips is a good idea right now in the pound. So that's what we're looking at there for as far as on the fib level and on the intermediate term as far as support targets and what have you. As far as resistance to the upside, well, then you already know, since today we spiked higher, well, if we're going to be neutral to higher, we got to take out this $1.3010. So we have just a little over a one full basis dollar point up above where we're trading at now to take that out. So that would be our breakout to the upside. So I would be very careful about being a long unless you get a breakout above there. And also for shorts, if you're an aggressive short, this is a great area to get short against right now, because if we do breach 130.10, that means we're making a higher move high after a lower move low, which puts us in the neutral ground. So key off of what the other currencies are doing. If the dollar is getting crushed and all of a sudden you have a rally above $1.3010, well, you can probably expect to see a lot of follow through. So now let's look at the US dollar Swiss. which interestingly enough has been kind of going in a little bit of a divergence against the euro, trading similarly but not quite as strong as the euro has been against the dollar, or with the dollar for that matter. Today it's slightly lower on the day, so US dollar a little weak, under pressure, but like I said, it's probably more of a corrective move. This is looking a lot like the euro US dollar is. The key thing here is to key off of this high that we set last, what was this? This was back on Friday, right? Or Thursday of last week? Friday of last week, excuse me. And then I would say the low down here that we had set earlier in September. This is the big one to the downside. This is the big one to the upside. In between here, it's kind of a digestive phase, but unless we get below 90.49, this area here, I think you're in a buy dip scenario. So this, I think, right where we're at right now is just a corrective move. And to see on a fib basis, if you look at it this way, and we get down to the 50% level, we've already targeted that, we've already hit that, and as far as the 0.618, that's only a little bit lower. So we're kind of looking for maybe still, if it's going to continue to trade lower, probably bottom out somewhere in this area here before we get a turn back against resistance. So not too much action going on right now. The markets are pretty quiet versus the dollar. Let's see what's going on over in Asia with the U.S. dollar yen. The yen doesn't open up yet. The yen is open up. The Japanese markets don't open up for another 5 hours or so. And here's where we got a little strength in the U.S. dollar, but overall going sideways. This market's been basically just a slow, grinding lower trade now since the beginning of June. Sorry for the landscapers outside. They're a little late today, so we postponed the broadcast just to try and avoid that, and then now they're doing a major leave cleanup, which is good. We need it done. So anyhow, I will try and speak over that. Like I said, there's a lot of sideways action going in the U.S. dollar yen. If you are a range trader, you're probably in a delightful mode right now, because except for every once in a while when we get a little swing, this market really just has been a tight trade for months. So, but it is in a grinding lower. It's making lower move lows, lower move highs until we see some sort of breakout to the upside to even make us neutral. I can't think of any reason to be bullish this market. So 106.58 here, this last high over here, this would be our upside breakout area, and below that I would say you still have to be an aggressive bear, especially since it's bounced off its lows. You know, I mean, the funny thing is that when the other currencies are strong versus the dollar, this may not be, and the opposite. If the other currencies are weak versus the dollar, this one may be strong. So there's not necessarily a total correlation with the yen versus the dollar. There's a lot of reasons for that, and it also has a lot to do with the price of oil, gold, and a couple other commodities as well. Not because they're exporters, but because of how they use them and are capitalized with them. So let's look at the Australian dollar now. US dollar and the New Zealand dollar, because in the same trade zone we actually have more action here. Now the Australian dollar has been lifting versus the dollar for the past week. Set a nice low last Friday, and now has been rallying very strong, kind of coming into this area where it's been trading for the past month and a half. So we got a nice little swing action, but what we've done here is make lower move lows, lower move highs, lower move lows. Right now we're currently in what would be a corrective phase. Only if we take out this last swing high around 73.48, what I would say we can be looking for any type of true bullishness and return to the overall bullish trend that this market's been in since April, or actually since March. It spiked in March and has continued to grind higher versus the dollar for quite some time. However, with they have the lockdowns, some certain areas of Australia have lockdowns, not to mention we have the depressed prices of metals and certain other things, that raw commodities. That doesn't bode well for the Australian dollar. So right now I would say it's still a sell rally forecast. It'd be very tough to get this to go any higher against the dollar. And as far as if it is a correction, let's see where we're at on that level. Okay, so we have, there we go, horizontal ray. If we go to the 50%, we just tagged that today. So we'll look to the 618, and then we'll put one of these in here. And now we have this downward sloping resistance. So we're looking for X marks the spot somewhere in here for the market to run out of gas, and then continue its wave lower, which would be good. The dollar hasn't had a nice corrective move really to the downside in a while, meaning that the other currencies are strong, and it's a corrective move. The dollar has been rallying for the past month and a half. There's no reason for it not to have a little correction, and now it has had its correction. We've had quarter end, the rebalancing of books, and people trying to make their books look nice for month end and quarter end. Now all of a sudden they're either getting back into certain trades or they are looking to put on new ones. So I think you're going to start to see a little bit more liquidity. Volume will go up. Whether or not we're going to have a continuation of the dollar bears or the dollar bulls coming back to reinstate the rally, we'll see. And let's look at the New Zealand dollar, US dollar now, and see what's happening with this one. So New Zealand dollar, US dollar here is rallying very strong versus the dollar. Now this one, unlike the Australian dollar that had been trending lower, it spiked higher at the end of September and then took out these lows. So this one's more neutral than the other ones, probably because they're well, they're definitely a different country than Australia. That's the obvious thing. But there's other economic reasons for it. So I would be, unless we get above this last swing high, which is just a big gap at 67.98, it's going to be really hard for me to think that you're going to be really bullish or strong in this market. Now, the Australian dollar may not make new highs, and the New Zealand dollar may against the US dollar. So we've had divergence in these currencies, even though for a long period during this year they've been trending somewhat in tandem against or with the dollar. So we'll see how this shapes up, but I don't think that right now you have a true bullish move here. I think it's just a correction, and I would say that you're probably, since you've already hit the 50% mark, which you did today, here's another one. Let's look at the 0.618. So somewhere in here, I think, is where you're going to run out of gas, get the turn, and then we'll see, especially if dollar strength starts to come back versus all the other major currencies. US dollar Canada, let's look in the North American trade zone and see what's going on here. We have the US dollar falling against the Canada for a second day in a row after going pretty much sideways. But this, once again, is in a similar format. This is a corrective move in the midst of a bullish bounce. So this could be the end of the correction and the beginning of a resurgence in the bearish trend that has been going on for months. Or this is just a pause for the cause, and then we'll see where this market goes in the next couple sessions. So I key off the highs there, and I would watch to maintain this trend. So if we take out this upward sloping support, which is pretty vertical, not that vertical, but it's a fairly steep slope, that would have us back on the bearish to neutral campaign. We so far are trading above that, so we don't want to get ahead of ourselves. As far as a target, and this is why you always want to make sure you know what you're looking at. You don't want to sell the market in the hole, that's for sure. Right. Okay, so we still have a little bit of room to the downside for a correction. So just because it takes out that upward sloping support line here, don't be too overly positive that this market's bearish. So it has a little more volatility and room to go. So we'll see how that shapes up. The US dollar Mexican peso, that's been getting a little strength versus the dollar too as well the past few sessions. This is kind of in the same thing. I think it's lopping around and where it's at, just creating a little volatility between 22.5 cents or pesos and 21.5 pesos. Probably going to be the range for a little while, unless there's any real layoff in the dollar where we start to see the US dollar get hammered by most of the major currencies. Now here's one that is probably in a buy dip scenario and will remain in one, is the Turkish lira, the US dollar Turkish lira. This thing has had quite the run up this year, period, and it's going to be very hard to be a bear on this one either. This is the kind of thing that it's probably going to remain in this holding pattern, pressing new move highs for a while. If it was to have a big sell-off like it had back here in May, and then it went sideways for months, that was a grind watching this one. But then once it heated up, it's amazing some of the moves that this had. Now this is a very widespread market, so be very cautious if you even think about trading this. But here's another indicator of where, as a whole, the dollar is very strong, especially when it starts to come into these bridge currencies between like the Middle East, Eastern Europe, and into China and stuff like that, in the Asia, in that trade zone, where the currencies definitely are not as strong versus the dollar. So, if you like this video, please subscribe to our YouTube channel. That way you know when the next one is coming on. And also, don't forget to check out the book, High Probable Japanese Candlestick Patterns, on Amazon.com. Available in paperback and Kindle versions. And also, remember to check us also out at www.forex-trading-unlock.com. You guys have